turn on the recording? All right, that's fine. Okay, we will start the session right now. When it's come to the this course unit, simply under the professional stage, we are going to discuss this overview of SL accounting standards under the your syllabus section C. Right now, under these, we are going to mainly discuss these regulatory framework of Sri Lanka accounting standards as well as other accounting standards. Now, mainly we can start from the regulatory framework, right? And after that, we can discuss all the accounting standards one by one. Now, here, as per your syllabus, we have very few accounting standards, 15, that is mainly for revenue from contract with customers. Then 23, borrowing costs. And yeah, then 33, financial instruments and earning per share, 40, investment property, right? So I think there is a mistake here. It may be a printing mistake, right? So borrowing cost and there should be another accounting standard here, right? Now, I think this is a mistake, right? Chapter objectives. This is not relevant here. Okay, so mainly you have around 4 to 5 accounting standards. Apart from that, we can discuss conceptual framework and regulatory frameworks, right? So when it comes to Sri Lankan context, yes, now you are in the final year, that means final level. That means you have good understanding about the accounting standards, right? Now, simply when it comes to the Sri Lankan context, now we need to discuss the regulatory framework, especially when it comes to the reporting part. Uh, that is very much important because now when we are applying accounting standards, now, because now we are dealing with several industries. Now, when you are applying accounting standards, there are some restrictions from several bodies. We have to comply with some rules and regulations. Therefore, first of all, we have to have an idea about regulatory framework, especially under the Sri Lankan context. Now, then we can discuss accounting standards, right? That is the second learning objective of this session series. And third one, right? Now, once you identify all of these objectives, then we can link Sri Lankan accounting standards and how international accounting standards are linked, right? So you have heard about the SLFRSs as well as IFRSs, right? Now, International Financial Reporting Standards as well as Sri Lanka Financial Reporting Standards, SLFRSs. In the same time, you have heard about IASs, International Accounting Standards. The same thing we adopted as Sri Lanka Accounting Standards, LKSs, right? So that's what we have to discuss here. Now, just understand the background, then you should be able to differentiate the Sri Lanka Accounting Standards and International Financial Reporting Standards. Then step by step, we can go ahead. Fine. Now, when it's come to the today's session, mainly we need to focus on the regulatory framework and the conceptual framework. Because before going to the financial reporting part, we have a base, right? Now we have a base for financial reporting. As we have already learned, we have the conceptual framework for financial reporting, right? Now, there are key things we need to understand when it's come to the conceptual framework. that conceptual framework is always, it's a guidance, right? Not accounting standards. Now, conceptual framework for financial reporting is always giving a set of principles that we need to adhere, that we need to comply when we are going to prepare financial statements and when you're going to prepare accounting standards. So therefore, always we have to take the base as the conceptual framework. Now, yes, when it's come to the other accounting standards, yes, now when you are applying the accounting standards to when you are going to prepare the financial statements, you have seen that always the guidance given from the conceptual framework, right? Because we are discussing about the objectives, right? Uh, and yes, and we are going to discuss qualitative characteristics, and we are going to discuss about elements of the financial statements and components of financial statements, right? So likewise, we are going to discuss several aspects in the conceptual framework, because always those components, right? Always these chapters will guide you how you can apply these accounting standards into practice, right? In the reporting path. So that's why you need to understand about the conceptual framework. Then with that, we can discuss about the regulatory framework and governance bodies and applicable rules and regulations, right? Everything we can discuss one by one. Okay, so here, let me share the screen here. Yeah. Fine. Now, right, look at here. Now, regulatory framework governing Sri Lankan accounting standards. Now, yes, in Sri Lankan accounting and auditing standard act is there, right? You know, that is 15th of 1995 act, right? That is the core legislation applicable to the Sri Lankan accounting standards, right? This is the important point. Now, this is the place, this is the point we need to know when it's come to the main areas of regulatory framework in Sri Lankan context for financial reporting. And the governance, yes, body is Institute of Chartered Accountants of Sri Lanka, right? This, as per this act, right? This Institute of Chartered Accountants of Sri Lanka has empowered to adopt as well as to alter or amend Sri Lankan accounting standards and to maintain the uniform and high standards of preparation and presentation of financial statements. Now, yes, you have heard about accounting standards. You have seen, you have that experience how we can apply all of these accounting standards. So this is the point, first of all, you need to know, right? Because this is the act, we have to comply with this. And this act has empowered the CS Sri Lanka to adopt, amend, and alter the Sri Lankan accounting standards, right? So that's what you need to understand. And mainly when it's come to the accounting standard committee, right? The accounting standard committee incorporated under the act, right? And also they are giving assistance to the Council of the CS Sri Lanka, right? Especially when we are adopting accounting standards, right? So this is the party dealing with, right? So with that, so here you can see the committee, how you can see the committee consists with. Now president, likewise you can see how that standard committee consists with, right? Especially president of Sri Lanka and a member nominated by Sri Lanka Division of Chartered Institute of Management Accountant of the UK, right? That we call them as SEMA, right? And registrar of the companies, right? Likewise, Director General of Security and Exchange Commission, SEC, right? And a member representing from Central Bank. Likewise, you can see here. And this is how the standard committee consists of. Now, just have an idea, right? Now, always we have learned about accounting standards and we know we just doing debit and credit. This is the base, right? This is what we have to understand, how the base is, right? And at the same time, we need to know the Sri Lanka Accounting and Standard Monitoring Board, right? We call it as SLA, right? SLA. Here you need to know that specified business enterprises, we call them as simply SBEs, right? Now for all the SBEs, they need to prepare the financial statements applicable to Sri Lankan accounting standards, right? So we'll discuss what is the meaning of SBs and everything. Now, just have an idea. Specified business enterprises, right? Specified business enterprises. Now, if your company is SBE, definitely you have to comply with the Sri Lanka accounting standards, right? In the Sri Lankan context. Fine. Okay, and apart from that, we have several acts, right? The company's license under Banking Act. Likewise, you can see the legal framework. Just go through with this list of acts and everything leisurely. Now, what I try to do here, now when it's come to the Sri Lanka accounting standards, the first thing, how you can access the accounting standards, right? How we can access the updated accounting standards. For that, you need to go to the Sri Lanka Accounting and Auditing Standard Committee website, right? Now, as we discussed earlier. Now, here you have all the auditing standards. I think you can see my screen, right? Is this visible, Taraka? I have shared the /c.lk website.
Yes, sir.
Okay. Fine. So now when it's come to the /c.lk, yes, if you need to download any accounting standard in Sri Lankan context, yes, that we are applying now. Yes, you can use this link. If you need any auditing standard, yes, we can use this. Now, yes, if I'm asking a question from students, most of the students, they are saying, if we need to download accounting standards, yes, we need to go to the CS Sri Lanka website, right? Yes, that's correct. But if you click on that link, again, you will be directed to here, right? This is the original source. Then this is the place you can download all the accounting standards, right? So then let's go to this one, accounting standards. Now here you can see another link called accounting standards. Then we can go ahead with that. And here you can see the Sri Lanka accounting standards bound volume 2025, right? Bound volume 2025. Right, once you click on that, here you can see all the accounting standards that we are applying now. All the accounting standards that we are applying now, right? But here, the first one is conceptual framework for financial reporting. So therefore, as we discussed earlier, please remember that this is not an accounting standard. This is only a guideline, right? The conceptual framework for financial reporting, that's a base. Now, except these, all others are accounting standards, right? Now, you know, you are very familiar with these accounting standards, SLFRSs, right? Here you can see LKSs, right? Everything you can see here, right? That's what you need to understand. Now, for example, let's go ahead with this conceptual framework for financial reporting. Then when it's come to the conceptual framework for financial reporting, here you can see, right? Very lengthy document is there, right? You can go through with this one very leisurely. I will give you a summary as well now. Then there you can see all the chapters in summary and what are the changes for the conceptual framework. But when it comes to history, yes, this is a revised conceptual framework. This was revised in 2018, right? But revised in 2018, but effective from 2020 onwards, 2020, 1st of January onwards. That means nowadays we are applying this revised conceptual framework, right? Okay, now we learned several key points, right? The first one, yes, we need to know the key background or simply the background of the accounting or financial reporting in Sri Lankan context, right? We learned about the act and the empowered bodies, right? And we learned about the standard committee, right? And we discussed about the SBEs, specified business entities. Then with that, we move to the Sri Lanka accounting standards, right? Then if you need to refer the Sri Lankan accounting standards, and at any time you can go to the /c.lk and go to the 2025 bound volume, right? Then there you can see all the updated accounting standard documents. Now here you can download them. Now we started from the conceptual framework. Now as we discuss, this is the base, right? This is the guideline, right? This is not an accounting standard. So, and also when it comes to this conceptual framework financial reporting, it is always providing a guidance how we can apply these accounting standards and how we can prepare the financial statements. It will provide a set of principles, right? So that's what we discussed so far. Now, especially when it's come to the conceptual framework, right? I will just refresh your knowledge here. Yes, of course, you have learned this one earlier as well. Now, when it's come to the here the conceptual framework, here you can see the key points, right? The chapter wise, you can see the key points. In the conceptual framework, you can see the objective of general purpose financial reporting, right? Now, when it comes to the general purpose financial reporting, yes, you know the difference between general purpose and special purpose, right? But when it's come to the conceptual framework, it is providing the objective of general purpose, right? Now, you know, as per your practices, you have seen that companies, they are preparing financial statements for their internal purposes, right? As well as they are preparing financial statement for general purposes, right? For their publishing purposes. They are preparing financial statement for public or for all the stakeholders, right? So that's what we called as general purpose financial statements, right? That's what we called as general purpose financial. That means simply when you are preparing financial statement for internal purpose within the organization, right? That is not covered in under this conceptual framework, right? If you are a listed company, you are preparing quarterly financial statements and annual financial statement for publishing purposes, right? Yes, that is under this general purpose. Now, therefore, please remember that the objective of the general purpose financial reporting will be covered in the conceptual framework. That is only for the general purpose financial statements, right? Then next one in the qualitative, in the conceptual framework, it says about qualitative characteristics. Qualitative characteristics in the sense the when you are preparing financial statements, right? When you are providing financial informations, what kind of qualitative characteristics we have to uh, comply with, we have to maintain, right? Yeah, Tarek, I think we have learned this one in the previous levels as well. So can you remember the qualitative characteristics? Any idea?
Yes, sir. The enhancing and fundamental qualitative.
Yes, exactly.
Yeah.
I think we met earlier as well, right, Tarek? Am I correct?
Yes, sir.
Yeah, under the previous level we met, right? If I'm not
Yeah.
wrong.
Yeah.
Yeah, Tarek. Yes, good. Now, now when it's come to the qualitative characteristics, again we have enhancing and fundamental QCs. Under the enhancing, we have 4 QCs, and under the fundamental, we have 2 QCs, right? So everything we have discussed, I think you can remember everything here. If you have any question, you can ask. I can explain again for your understanding. So now when it's come to the financial statements, yes, we have components of financial statements, simply 5 components. And especially when it's come to the elements, again, that's a critical point we need to learn because components means 5 statements. The elements means, yes, assets, liability, equity, income, and expenses, right? So all the definitions here you can see in the conceptual framework. At the same time, recognition and derecognition, right? And measurement criteria, presentation and disclosure, right? And concept of capital and capital maintenance, everything we can see in this document, right? Okay, now when it comes to conceptual framework, there are a few key points to remember. The first one, this is not an accounting standard, right? This is only a guideline. And this is the revised conceptual framework. What happened? Yeah, can you see the screen, Taraka? Seems something else happened.
No, it's dark, sir. It's
Oh,
black,
yeah.
completely black.
Yeah, me too. That's something happened, I think. Yeah, what we discussed, the conceptual framework. Yes, there were several key points. Yes, this is not an accounting standards. Yes, this is not an accounting standard. Then this is a revised conceptual framework. It was revised in 2018, right? Then, but effective from 2021st of January onwards. All right, now I can share. Yeah, okay, fine. Now here you can see the key chapters, right? Now under the objective of general purpose. Now when it's come to the conceptual framework, here you can see the key components. It says about the objective of general purpose, then called QCs, and statements and elements, all of these points, right? Now in detail, you can see step by step. I will upload the project summary, which is issued by IFRS. Then you can go through and have an idea about the all the changes and new amendments and everything. Okay, that's all about the conceptual framework. So with this, we can go ahead for the main area of the today's session, especially it is going black. Okay. Fine. Now, when it's come to the regulatory framework, again, we need to discuss this thing. Now, as we discussed, the difference between general purpose and special purpose, right? So we have discussed this one earlier as well. Now, just have an idea as we discussed what is the difference between general purpose and special purpose, because the financial reporting, especially in the conceptual framework for financial reporting, we are covering the general purpose financial statements, right? When you are applying accounting standards. So now the next discussion point was, right, why we need a regulatory framework, right? Now, yes, as we discussed, when we are preparing general purpose financial reporting, right, we need to provide always relevant and reliable information, because now as a company, we are responsible to provide all the information to our stakeholders. So now when it's come to this model, the business is there, investors are there, and the stakeholders are there, right? So what you need to understand that now when it comes to the entity concept, it says the business and owners are two different parties, right? In the same time, in other side, we can see the public, right? So, and also the other stakeholders, investors, customers, suppliers, likewise, you can see all the stakeholders. Now, as a company, when we are providing information, right? As a company, when you're providing information, we need to provide the relevant and reliable information. Relevant and reliable information. So that's what we need to maintain here, right? Now, when you are highlighting the need of regulatory framework, you can use this rationale. So here, now you have heard about gap, right? So generally accepted accounting principles in any country, you can see these practices, right? Generally accepted accounting principles. This is mainly combination of national company law. Now, in Sri Lankan context, we have separate company law and national accounting standards, right? Again, gaps. Yeah, again, the gap consists with the national accounting standards and local stock exchange requirements, Sri Lankan context, CSC, right? So now combination of all of these three areas, right, we can see as gap. Now, this is how the combination is. Now, for any country, you can have an idea, right? Now, when it's come to the generally accepted accounting principles, consist with these three areas. Now, in Sri Lankan context, again, when it's come to the regulatory framework, key sources here you can see. We have Company Act, right? Companies Act and Sri Lankan Accounting Standards, conceptual framework as we discussed, and apart from that, other rules and regulations, especially SEC, Security Exchange Commission, and CSC rules, right? Now here you can see that these are the regulatory framework. This is the regulatory framework in the financial reporting. Why we need to learn these things? Because as a company, when you are preparing financial statements, right, that is not only the reporting part, that is not only the providing financial information to the stakeholders. Now, when you are providing information, when you are satisfying the stakeholders' requirements, right, we need to know our limits, right? We need to know what to publish and what not to publish, right? Therefore, always we should be within our scope. So here you can see the key sources, right? And when it's come to the financial reporting, when you are preparing financial statement simply, right? We have to comply with these uh, areas, right? The simply we have to respect to the domestic rules and regulations, right? Now, yes, we are applying accounting standard, but when you are going to do it practically, we have to respect to the existing rules and regulation system in the Sri Lankan context. Then here, when it comes to Companies Act, right? Again, here you can see Act number 7 of 2007, right? And all the accounting standards, right? As we discussed, here you can see the Act 1995, number 15 of 1995. And the empowered bodies, Institute of Chartered Accountants of Sri Lanka, right, as we discussed. Then we discuss about the specified business enterprises, right, specified business enterprises. So if you need to download accounting standards, yes, you can go to the /c.lk website. And apart from that, we discuss, yes, SBEs in the Sri Lankan context, they need to comply with these accounting standards, right? So here you can see who are the parties or who are the companies we can include under the SBEs, right? Mainly when it's come to the SBEs, you can see the listed companies, right? They're simply all the companies listed in the Colombo Stock Exchange. Then banks of the country, and insurance companies, factoring companies, finance companies, leasing companies, unit trust, right? The fund management companies, stock brokers and stock dealers, stock exchanges, right? And public corporations and non-listed companies, right? Now, all the parties you should include or you should recognize as SBs. So that's a thing you need to understand. And if it is not a listed company, right? If it is not a listed company, if you are within these boundaries, definitely you have to uh, consider it as a SBE, right? A specified business entity. Now, just looking at this, you can understand, right? Almost all the companies are there. Then simply they need to comply with these accounting standards. Okay, so this is what we discussed now, right? Now, here you can see the difference, right? Because as per your yeah, as per your syllabus, we need to link between Sri Lankan accounting standards and international financial reporting standards. But here you can see, as we discuss, how these two accounting standards are linked, right? The Sri Lanka accounting standards, right? As well as here you can see IFRS, right? So Sri Lanka accounting standards comprise accounting standard prefixed both SLFRSS and LKSS. Now, when it comes to Sri Lankan accounting standards, yes, both of these SLFRSS and LKSS we can include. Now, how you can take the SLFRSS? Now, you can see. Yes, here you can see SLFRSS refers to the Sri Lanka accounting standards, right? But IFRSS, right, you can see that is International Financial Reporting Standards, right? Now, when we adopt the IFRSS to the Sri Lankan context, that is SLFRSS, and when we are adopting IASS, International Accounting Standards, right, to the Sri Lankan context, that is Sri Lanka Accounting Standards, right? So that's what you need to understand here. And apart from that, we have IFRIC and SIC pronouncements, right? IFRIC and SIC pronouncements. Now, when it's come to the accounting standard with platform, the source, here you can download before the bound volume. There is another place, there's another database you can download here, right? You can download all the IFRICs and SIC pronouncements using this link, right? Because now IFRICs and SICs are always updating. That means when someone is, let's say, when we are updating accounting standards, we are addressing those IFRIC and SIC pronouncements criteria as well. Then we can withdraw the SIC or IFRIC standard and we can continue with the new accounting standard, right? So that's what you need to understand. Now, our learning point was if you need to download any SIC or IFRIC, you can go to this link and here you can see all the IFRIC and SIC pronouncement. Now, simply what's the meaning of IFRIC, right? Why we need IFRIC? Any idea, Tarak? SIC and IFRIC?
That is, I know by the word, it's like interpretation committee.
Yeah,
But I
yeah.
don't have much idea.
Okay, right. Yes. Now, simply, now when it's come to the IFRIC and SIC pronouncements mean, because IFRS, they have issued these IFRIC and SIC pronouncements because now when you are going to apply the accounting standards in practically, right, there may be some mismatches, right? Standard says we have to do like this, but when it's come to the practical scenarios, as it is, we cannot apply, right? There may be practical issues. Simply, I'm telling. Then to address those practical issues, IFRS, they are issuing IFRIC and SIC pronouncements. For the IFRS, they are issuing IFRIC. For the IASs, they are issuing SIC, right? So here you can see IFRIC and SIC pronouncements. Then in the same time, let's say earlier we had LKs 17, right? And earlier we had LKs 18, right? Now we have SLFRS 15 for the revenue. Then what has happened? Now, when they are updating the accounting standard, right? Now, all the IFRIC and SIC pronouncement that were issued for such area will be replaced with the new accounting standards, right? So that's what you can see here. Now, anyway, now we have these IFRIC and SIC pronouncements. Now, for example, what I'm trying to tell you is now, for example, let's say now SLFRS 15, that is revenue from contract with customers. Here we are discussing how we can recognize revenue, what's the 5-step model, right? What are the performance obligations, then how we can complete the performance obligation, at which point we can recognize revenue, everything we are discussing here. But earlier, right, before coming to the 5-step model, right, before introducing the 5-step model, there were a lot of issues when you are recognizing revenue from the company perspective, right? Therefore, they have issued a lot of IFRIC and SIC pronouncement. Now, when they are updating this revenue standard to the SLFRS 15, they have issued those previous issues. And now here you can see, right, with the introduction of new accounting standard, here the last point of this standard document, you can see withdrawal of other standard, right? Here you can see, right, SIC and IFRIC, right? Here, SIC and IFRICs, which was withdrawn with the introduction of new accounting standard, right? Here, the last point of this standard document. Here, clearly you can see what kind of IFRIC or what kind of SIC pronouncement withdrawn as a result of with this new accounting standard, right? That's what you need to understand. That's why I said these IFRIC and SIC pronouncements are updating time to time. So that's why we need to download all the IFRIC and SIC pronouncements from now. If you need to download the updated documents, it's better to refer the /c.lk and you can download the SIC and IFRICs as well. Now, because when we are introducing or when you are updating new accounting standard, we are addressing the previous identified issues. That means we have to remove these IFRIC and SIC pronouncements that we have already issued previously, right? So that's what you need to understand. Now, for a specific new accounting standard, if you need to see what are the replaced IFRIC or SIC or any other accounting standard, right? Here you can see the last point of the standard document, you can see everything, right? Now, previous revenue standard was LKS 18. LKS 18. At that time, there were a lot of issues how we can identify the construction contracts, right? How we can identify the loyalty programs, right? How we can identify the agreements for the construction for real estate, right? A lot of issues were there. That's why they have issued following IFRICs and SIC, right? Now, rather than sharing money, rather than exchanging money, when you are doing a transaction, let's say you are not giving money, right? You are exchange something with your goods, right? Then simply the barter transaction, right? There was no any guidance in the previous accounting standard under the LKS 18. Then with the new accounting standard, right? That is under the SLFR 15, they have clearly identified these issues and they have addressed it. Therefore, no need to continue or automatically when the IFRS, when they are issuing the new accounting standard, right? When they're issuing this new accounting standard, these previous IFRIC and SIC pronouncements will be withdrawn, right? That's what you need to understand. Now, you know what's the meaning of IFRIC, right? And why they are having and how they are withdrawing, right? Simply with the new introduction of accounting standard or with the new updates of the new accounting standard, you can see these IFRIC and SIC pronouncements will be withdrawn. That's what you need to learn as an additional learning point. Okay, now with these, let's move to the again this one. Yes, now when it's come to the evolution, yes, we adopted IFRS to the Sri Lankan context in 2012, right? Then after that, now we are still using SLFRSS and LKSS, right? Here I have mentioned everything for your understanding. And Colombo Stock Exchange rules, listing rules also here. You can go through leisurely. And apart from that, mainly we need to discuss about ISB, right? ISB. Now, when it's come to the ISB, right? That is International Accounting Standard Board, ISB, right? Now, earlier we discussed about standard committees and act everything. Now, in Sri Lankan context, that is okay. But when it comes to the international context, this is the base you need to know, right? This is the base you need to know. So especially when it's come to the IASB, right, the formation of International Accounting Standard Committee, IASC, first happened in 1973, right? And their aim was to develop the accounting standards throughout the world, right? They tried to maintain the harmonization, right? Each and every country, they need to follow the same set of accounting standards. That was their initial thought. Then step by step, the IFRSS came. Then IFRSS we adopted in 2012 to the Sri Lankan context, right? IASS became LKSS. Yeah, IFRSS became SLFRSS. SLFRSS, right? That is a story. Okay. Now here you can see the standard setting process. You can go through with this leisurely. Now the next concept is harmonization, right? The harmonization mean it's a kind of process that we can, let's say, if all the countries in the world and all the companies all over the world, if they are following same set of principles when they are preparing financial statement, what will happen? Comparable will be made, right? There will be consistent, right? There will be consistency. So that's what they are trying to do here, the harmonization part. Now, here you can see benefits of the harmonization, and here you can see barriers to the harmonization, right? So just you can go through with this. And as we discussed, the next point is conceptual framework. We have covered everything here, right? So conceptual framework for financial reporting that is issued by Sri Lanka, right? And the the purpose of the conceptual framework is to provide the coherent set of principles, coherent set of principles. These are the keywords you need to include when you are defining the conceptual framework for financial reporting. And as we discussed, this is revised in 2018, March, but effective from 2020, 1st of January onwards, right? That's all about the conceptual framework. Now, here you can see the history of the conceptual framework, right? And the purpose of the conceptual framework, right? Why we need the conceptual framework, purpose, right? The significance. Now, exam perspective, now the same question or same content can be tested in several aspects. What is the purpose? What is the significance of having conceptual framework for financial reporting? Why we need a conceptual framework for financial reporting? What is the importance? Why there is a base, or why there is a guidance, common guidance for all the accounting standards, for all the situations in financial reporting? Likewise, the same content can be tested in several ways. Now, that's what you need to understand. Now, this is what we discuss as the chapters of the conceptual framework. Now, it says as key components of the conceptual framework, right? What are the chapters you have to include there? Then here you can see the objective of financial reporting. We have already discussed there. Now, this is the important point. Underlying assumptions of the framework. Now, when it comes to conceptual framework, it says about the underlying assumptions, right? Now, here you can see the three underlying assumptions. The first one, accrual basis, right? When you are preparing financial statements, you know, we are preparing based on the accrual basis, except cash flows statement, right? That means always we have to prepare all the financial statements based on the accrual basis. That means simply when you are doing the financial reporting, we are considering accrual basis and going concern as well. Now, when you are, because now from the business perspective, our responsibility is to provide the financial information to the stakeholders reliably. Then you need to know about your going concern. You need to convince the stakeholders about your going concern, right? That means simply you can continue operations. There's no any solvency, right? If there is something, you have to disclose them to your stakeholders. And also when you're preparing or when you are presenting your financial statement, there should be true and fair view. There should be a true and fair view, or simply we call it as a fair presentation, right? So this is what you need to understand. Then, you know, the accrual basis of accounting, right? And going concern, right? Here you can see an example. And we discuss about the qualitative characteristics. Yes. Now, when it's come to the framework, right? The conceptual framework and the regular framework, we need to know these points. Because now, when it comes to the regulatory framework, yes, we need to comply with the national company laws and national accounting standards and everything. Now, in the conceptual framework, it says the same thing, right? It says the same thing because now here qualitative characteristics, if you can see here the relevance and faithful representation, what it says. Always, now when it's come to the faithful representation, look at here. It should be when you're providing financial information to the stakeholders, right? Should be complete, neutral, and free from material errors. Free from material errors. Now, that's what you need to understand. Neutral in the sense there is no any biasness. There is no any biasness. When you are providing information to the stakeholders, that will not over presenting, right? That will not overestimating, right? Your assets, liabilities, and income, right? That should not be happen. So that's what happened in the faithful representation. Always when you are explaining about the concept faithful representation, you have to highlight three keywords: complete, neutral, and free from material error. Free from material error, right? So with that, here you can see the qualitative characteristics, right? Now enhancing QCs. And again, under the enhancing QCs, we discuss about comparability, verifiability, timeliness, and understandability. Now, simply when it's come to the financial statements, when you're providing financial statements, right? So when you're providing financial statements, yes, you need to maintain these qualitative characteristics, especially now as a company, now you're preparing financial statements and you're providing simply financial information to the stakeholders, right? Your annual report means you are providing financial and non-financial information of your company to the stakeholders. Therefore, the conceptual framework, it says you have to maintain these qualitative characteristics. What are those? Yes, what are those? First one, comparability. Comparability. What it says. Now, when you are providing financial information, it should be comparable to others, right? Others in the sense stakeholders, right? Always you have to prepare the financial statements and you have to provide the financial information in a comparable manner. In a comparable manner. Now, verifiability in the sense, yes, here, verifiability. Yes, that means when you are providing information, right, it should be faithful represented, right? It should be faithful representation and also timeliness, right? Updated informations, right? You have to provide because the stakeholders, they are referring this information for their decision making process, for their investment making process, right? Therefore, always you have to provide the updated information and understandability. That's why you can see the annual reports, most of the figures and drafts are there, right? They are providing not only the paragraphs and not only the numbers, they are providing the analytics. Visualizations are there, diagrams are there, right? Charts are there, right? Percentages are there. They have interpreted what they have done, right? So always when you're providing information to the stakeholders, this should be in an understandable manner, right? That's what we call as understandability. Understandability. Okay. Now comparability. Now when it's come to the annual report, you have seen that comparability is there when you're providing financial statement. Just take an annual report, right? You have your current year figures, last year figures. You have your company figures and group figures. You have your company figures and you have industry averages, right? You have provided last 10 years history. Likewise, everything you can see there. So what you need to understand is the comparability in the sense, right? When you're providing informations to the stakeholders, it should be comparable. They should be able to compare with other figures, the other competitive information, right? That's what it says about the comparability. Now when it comes to face of the annual report or face of the financial statement, yes, for each and every statement, you have seen that, right? Even in the notes, right? When they are providing schedules and other notes, yes, they have mentioned about the previous figures, industry averages, right? So that's why, that's how the companies are maintaining these qualitative characteristics. Okay, now here you can see the elements, right? These elements you can see on the financial position and these elements you can see on the income statement. And here you can see the assets, right? Here you can see the assets, liabilities, right? And example also there, right? Equity, the definition you can see here, income and expenses, right? Income and expenses. So that's what we need to understand under the elements of the financial statements. And with that, here simply we are discussing about the what are the elements, what are the recognition criteria, right? What are the measurement criteria? How we can classify something as an element, how you can recognize as an element, right? Or how you can take the monetary value or simply how you can measure it, right? Measurable measurement criteria. So that's what you can see in this conceptual framework, especially, right? Under the measurement basis, you can see we have historical cost, right? And current value. Under the current value, you can see fair value, value in use, and current cost, right? So mainly two types of measurement bases are there. This is the first one. Okay. This is the first one. Okay, this is the first one. This is the second one, right? The second method or second basis, current cost. Then under that, under the current cost, you can see 2.1 is a fair value. For this, we have separate accounting standard, that is SLFRS 13. Then 2.2, the value in use, right? What it says when you're going to value something, yes, you can predict the future cash flows of that particular asset when you're using. Then you can take the present value of each cash flow. Then you can calculate the value in use, right? If you are using this asset in the future, you will receive future income. Then you can take the present value and you can value the current or today's value of that particular asset. That's what we call as value in use. And current cost, right? It's like historical cost, right? Or entry value. It reflects the prices, the market, which is the entity would acquire asset or incur the liability. Current cost, that is 2.3. 2.3. Okay, just have an idea about this. Okay. Now, mainly, this is what we have to cover in the conceptual framework and other regulated framework, right? Now, as we discuss, especially in the Sri Lankan context, right? We have to discuss about applicable sources, right? The regulation sources for financial reporting, Companies Act, Sri Lankan Accounting Standards, Conceptual Framework, and other rules and regulations, right? Give me 1 minute. Okay, then. So, yeah, that's what we discuss here. Now, regulatory framework for financial reporting in Sri Lankan context. For exam purpose, just go through with these for areas in detail. Now, this can be tested for the exam purpose as well. Now, here you can see in detail, right? Accounting standards and Companies Act, SBs and everything. Now, that's all, right? So this is the main thing we have to cover under the regulatory framework for governing Sri Lankan accounting standards, right? So then we just went through with the all the accounting standard documents, which is published in /ir.lk. Then we discuss about mainly the linkage between Sri Lankan accounting standards and international financial reporting standards. Okay, so with that, you can leisurely go through with the materials, a textbook, and everything. So I will share my slides as well. Then just go through and do the self studies. Then it will be easy for your exam, right? Okay, next week we can conduct the next session. So simply we are going to discuss the next accounting standard, that is SLFRS 15, right? That is revenue from contract with customers. Now, as SBE, how they need to apply these SLFRS 15, what are the use cases, and we are going to discuss some real cases. And especially when it's come to the financial reporting, how we can identify the transactions and how we can apply the 5-step models, right? And disclosure requirements. Those are the areas we are going to discuss here mainly. And special cases are there under the revenue or from contract with customers. Now, especially in the annual reports, you have seen that now as per the industry differences. So there are some special disclosures. So we will discuss them as well with some real world scenarios. Okay, then with that, we can wind up the today's session. Then next week we can continue the remaining part. Any question, Target?
No, sir. If it is possible, share now that lecture materials, please.
Yeah, sure, sure. How it is happening now, same as the last time when I'm sending it to the Dinusha, he will share with you, right?
Yeah, that is also possible if unless you can share in our WhatsApp group, sir.
All right, sure, sure.
Smart
That's
also in there.
yeah, that's good. That's the speed. Yeah. Okay, Targa. Anyway, thank you for joining. And where are you working, Targa?
I'm in Maldives, sir. I'm just
Ah,
very
right.
busy. Just now if you're
Ah,
going
right,
to
right.
room,
Okay. In which resort?
Kunamashi. There's a
Ah,
resort in
right, right.
Maldives.
Yeah. Good, good, good. Last month, I came to Cinnamon Donvedi in Maldives.
Sure.
Yeah. Very nice places are there. Very good. Okay, Taraka. Then with that, we can wind up the session. So we will meet on next week, right? See you then.
Thank you. Good night.
Okay, good night.